Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So a little wild ride today. I think the Dow is down about 120 points or a little bit more than that at the lows, and then we closed well off it. Definitely very tricky. I will say that I'm not just buying every little dip that happens, especially when it feels like it could be day one. Typically when you get like a day one of a potent move, after such a big run that we've had, you get a little bit more downside or follow through. But every time that we've had this somewhat of a day one, either we close well off the lows and it's really not damaging. So I know it's tricky for guys even like me who's trying to do portfolio approach, because again, on these down moves, especially on day one, I'm lightening up versus adding to my portfolio approach, so it's taking away some of my gains. But what I did learn is, on those down moves, I'm actually covering my spider hedge. So instead of pressing them, because then you press your spider hedge on that down move and you don't add to your longs, and you're getting beat up on both ends, and that's when the frustration really goes. So, I'm covering my hedge on the down move, and then, letting the tape figure it out. And if I don't buy down there, big deal. Let things just rebuild, and there'll be better entries anyway. So you look at the chart here of the spiders, and you'll see, look at the tail that created today. We went through the 8-day, held bigger support that I believe we talked about within the morning call. We had two levels. If you listen to what we talked about on the Twitter sphere or just in the site, 150.29, which we broke below. But if you pressed on that break below, thinking that we were going to get to 149.43 or hit or break this trend or go to the 21-day, you got hurt. So what I learned is I said I'm going to cover here, which I covered the majority of my spiders. And yes, it would have been great to add to a lot of longs in that time frame, but I didn't. But I still have, I think, 6 longs, 1 short. And now let this range continue. We're holding in there. It's not as smooth as it was from when we had the big gap up, digestion, trading versus the gap for the stair-step approach through 1474 to, the clean move above 1500 on the S&P. So, but rightly so, you have to shake things up in here, in order to continue. And at this point, just do a little bit less. As far as, the ride that we've seen, pretty crazy in Apple. There's hedge funds talking crazy strategies. You had Ihorn on today, this morning, where, it rallied early morning when he was talking about his whole preferred concept, and then it failed. And then later in the day, sitting there not really expecting much, boom, Apple responded saying they'll give shareholders a chance to vote for that. And, this time you finally had commitment. When I trade Apple, it feels like, I like to buy high and sell higher, because it feels as if Apple wants more buyers higher. Every time it pulls in, people get a little worried about it because it's been under such pressure. So even today I was like, okay, I want to see this buy pressure hold. I want to see it go through 462, hold there, go through 465, hold there for it to get to 470. And it did. And if you look at the chart of Apple right now, you'll see that it really hasn't gone too far. This was your first wake-up day, and then it tried to go cleanly through this area and failed yesterday, and then today closed on the highs. So I'd love to see, some more follow through. You have the 21-day at 476. It tested it here, and it couldn't get through. It's only been through it a few times and failed. So we'll see. Hopefully it could at least get there and get a little bit more follow through. Then you have your point of reference right here, 483. And who knows? Maybe it really surprises people and tests this downtrend that's been in control of the stock. But for me, I stayed long some. Let's hope that we get some follow through tomorrow. It's been a nice little 3-day trade with some power. So we'll see if it continues, and hopefully it does for investors that stayed the course, or just for guys that are initiating trades. The best trade we had in Apple after this decline, was this red dog reversal right here where it gapped up. You saw some appetite, held higher, and this is where it failed. It feels like everyone's like, oh my goodness, Apple had such a big rally. Look at this, it's been 3 days. Not even, how many points off the lows, 25 or so, after a 700, after a 250 point decline. Now people are like, why is Apple going up? The whole way down, oh, why is Apple going down now? Why is Apple going up? It had a 3-day bounce. Anyway, as long as commitment stays to it, I'll stay with it. There's been definitely those action areas that has been, where it's been power packed, where you can take more size and then sell some and then stay with some. That's kind of what I did when it went back through the morning high of 463. I added a lot, added some 465, sold some into the 470, but I took some overnight. So if we open down, same type of approach we did 2 days ago, where as long as it holds in there, maybe it goes positive and you can continue that trend. Google had another downgrade today, came in long. didn't really trade it that well. It wound up making historic highs and then traded off. But all in all, Google held in there, and it still looks good near historic highs. Okay, holding the 8-day, just hard to get some extension there. Amazon, I actually did something different. I made some money short. I was looking, we've been talking about this pattern ever since earnings. 284 was your resistance. It came lower, and it's been hovering in this lower end. So today, it was a nice trade. I started shorting it around 261. I added at the 50-day. I'm not sure why the 50-day is not in here. Put the 50-day in, basic studies, moving average, 50-day, boom. So it broke the 50-day, but then it reclaimed it, so I just covered. You look at the 5-minute, and you'll see how there was momentum in the beginning of the day, and then it failed, okay? Here is your, gapped up and showed your weakness right off the bat. Here is where, I got short, and then I added, I think somewhere around here for the, when it broke the 50-day. And then covered the majority of it, and then I said I'll put my stop in if it reclaims this 260. I think I got stopped out right here, and that'll be my trade. We'll see what happens thereafter. I will say I'm almost done with gold and silver. I don't know who, I remember everyone's like, oh, you're an unbelievable gold and silver trader. You made the call 850 to 1500, whatever. I'm really not. It was just a nice setup, and lately I've lost a decent amount of money trying to time a breakout in gold. I was long coming in. They hit it hard early on, so I got stopped out of that in my silver, and then all of a sudden markets came in. Gold and silver looked like it was going to go, and then it didn't. And lo and behold, I got stopped out, and I gotta say I have no interest now. Maybe they're doing their job to create guys like me who are uncommitted to have no interest. You could say it's still in here, but I'm out of it. So if you're looking to be short, I don't think shorts are happy, and longs obviously aren't happy. It's tightening up. I guess you want to see a close below this wedge and see what happens, or a close above it. Same thing goes for gold. Just very whippy. And if you buy high, you're getting hurt. If you short low, you're getting hurt. And today, I would say it didn't really close so horrendous, but no need to be in it for me. I'll wait till, I know the reason why sometimes I try and cheat on it and anticipate and have some before a move is because it does a lot, after hours or pre-market. So you want to be in some if you have a thesis. But for me, I'll tell you right now, I don't really have a thesis for gold or silver. I'm trying to create a trade here that just hasn't worked. As far as the banks, a lot of them tried to go early on and had a bit of a down day. This is Goldman Sachs. It's still hugging the 8-day moving average. It's been a really nice trade. Lots of different areas to be long it and add to it when the time was right. So now the question is, does it break this upper level, and retrace down to bigger support, which we'd all love to see. So at this point, you have a doji, so the market doesn't know. It's not it was a bit of a red dog reversal as it traded through, came back below. So it's just a sign that it might need to base and maybe correct a little bit, which would be good. Same thing, the same thing goes for Citi. And I know I was buying it at 43 this morning, didn't get paid. Holding in there as the 8-day has caught up with the 21-day. Didn't break out. So for me, I'm kind of just going to give it some space because I'm not sure. It's still in a really nice trend, and stay with it if your thesis is to be long it. My swing trade and my long is Bank of America. Bank of America is still hanging out. It's had a really nice move since it broke above 995. Right there, boom. Here is your tack on trade right here. Then it topped out. Here is your descending channel, broke above, retested, and now it's it's hanging around. It's building another base. I love when Meredith Whitney comes on. She likes to come on when it's getting a little toppy. I think she came on right around here, after a huge move, but whatever. She's a fundamentalist, not a market timer. So I'd say, the longer it holds above this 1156, the greater the chance it could continue, but it's getting a bit choppy. As far as Facebook. Still building a base. It was a nice clean move for us when we started the year, okay, right around here was in my thesis to get to 32 to 34. Happened very quickly, but in the first month got as high as almost 32, and went a little sideways, and now it's basing a little bit, but it's not the easiest to trust. I've been just scalping it now. I think it needs more time before it goes again, and I do think the highs of the year are not in. As far as LinkedIn, we've been talking about it as a potential IPO to stay with, the ingredients of a potential multi-year winner. Did I say multi? Where's Darcy? I'm kidding. Well, here it is. I believe it's trading after hours. It cleared this 129. It's guys that were quick that didn't want to take options were able to buy it above 127.45. Hit almost 140, 138.5, and now just let it sift. For me, I know I have a call spread, so because I don't trade it before the number, so I bought the 125, sold the 135s. Let's just hope it stays above 135 and could cash in on it, and that'll make up for my Apple horrendous call spread that wound up losing me net $5 or $6. But again, it was risk was premium paid. I didn't hold the stock like Apple into earnings and lose 55 points. I lost $5 or $6. Same way with LinkedIn. I probably would have made more money if I had the stock, but I was happy with taking a call spread, being involved, have it calculated, and stay with the system. I think I've only done 3 option plays into earnings. GE worked. This hopefully will work, and Apple didn't. But really, it's just ways to stay within a stock that you like. If you want to have a low risk, if you're long LinkedIn for a year or so and you hold through, good. That's what you've been doing. And congratulations. You've done your homework. But anyway, we'll see how it opens tomorrow, and we'll go from there. As far as someone asked me to talk about BBRY, BlackBerry. Really Sperlin's been trading this one, and he's been trading it pretty well. It's been very choppy. I remember over the summer we had it for off the charts, way down here. Okay, that's when it had a nice lower base, broke out again. This is when I think all of the media sources started talking about it, and then it broke, came all the way back in, came back up. It's getting whippy. Nice trading vehicle, so just trade it. Netflix, looked as if it was going to have a bit of a red dog reversal today, and it somewhat did. Traded above the highs, came below. Some guys made some cute money short. Good job if you did. Tried to do that right here. Then it needed to consolidate, so maybe it needs to consolidate again on this level. So continue to trade it, continue to use a tier system. You know what happened today, which guys on the site were happy about? That new issue. We talk about the art of the new issue, the first day trading, how to know whether or not it's priced right, how to know whether there's demand. And typically, it opens up, puts in a high print, pulls off a little bit because you have all the flippers get out of the deal. You have everyone who, doesn't want to be involved. And the way you see if it's, going to be strong is if it takes out that high print. Sometimes it does it in 10 minutes, 5 minutes, sometimes 30 minutes. And that's when active traders like ourselves and Sperling could get involved. And if it stays above there, you get a decent trade. So if you look here, what was it, XONE today? Yeah, look, my memory's not so bad. Was it XONE? 3 minute. Here you go. Okay. So here, this is how I do it. Here was your opening print. You write it down. Right there was 24.75. It made a nice little bull flag, or not even a flag, just a wedge. Actually, I don't know exactly. Maybe it was even a little bit lower. Let's go to the 3 minute because I think the print was lower. It was somewhere in here. So this was my first trade when it went through the opening print. Didn't even sit around for a half an hour. And then you had a really nice move up to about 25.87. I remember that number. No, 25.73. Came back in, started to go sideways, and then showed a little bit of institutional interest, some demand. And then here was your next buy price right when it went through 25.75. And then it wound up going all the way as high as 27. I think I sold into this move, got done. I was done with it, or I tracked a little bit, and I just sold it when it came back. But meanwhile, nice demand, nice strategy, right? Opening print. Held higher, traded through it, consolidated again, traded higher, traded through it, and then it even gave you another tack-on trade into the 27. The reason why I focused on this one, which I normally don't do, is because it's in that 3D graphic printer sector, which has been really hot. Triple D, SSYS. So it made sense that people have been making a lot of money with those. It's been a nice 2-year trend. That's a new company in that sector coming public. There'd be interest around it. So you put all the pieces together. Decent trade, decent for cash flow, something to do in a time when some people are frustrated with the stock market. Anyway, with that said, stay with the trend until it ends. Don't fight it. If you're not seeing it, do a little bit less. If your portfolio isn't working, bring it in, take it off, start a new portfolio in a different spot. Just do something different to get yourself green. I know my traders that don't take portfolios and that just trade, intraday. What they do is if they've had a bad streak, they just take everything off and they do a little less. They put a few green days together. They think positive. They start getting their act together, and then they start adding their size back, adding positions back on, and then they're back on track. That's what you have to do to get back on track. And if you're killing it and you're riding the right stocks and you're making all the right moves, congratulations. Don't let your high get too high because you could always get smacked down. Even keel is the way to stay the course. If you're in the Northeast, be careful. Tomorrow's going to be a Northeaster. I'm not coming into the office. I'll be trading remotely, so I'll try and be on T3 Live to help everyone navigate. Have a great night. It's Thursday. Have a drink. And, back to the grind tomorrow. Have a good one.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.